Good morning, good morning. Welcome to everybody. I can see some people joining now. Who have we got coming in? Welcome everyone. Everyone's flooding in. I can see Narelle, I can see Peter, I can see Tom. Jane, welcome. Bin, Edith, lots of people. Lyndall. This is great. Thanks, guys. Welcome. We're just going to give it a minute or so that we have a good attendee. We have had a massive response to this, so it is needed. Deborah, I can see you've joined us as well. Darren, welcome. Darren Stevenson. I wonder whether that's the Darren Stevenson I know. Welcome, guys. Kate, welcome. And I can see a few more joining now. If you can, just pop in the chat box. I want people to be as interactive on this as possible. Just let us know that you can hear me loud and clear. And Rose will be managing our chat box for us today. While we have everybody coming in, just to make sure we can see you. Yes, I can see you in the chat box. Great, Kate. Thanks, Lyndall. Thanks, Kimber. James. Hello, James. Welcome. Janelle. Nice to see you here too, Janelle. It's always nice to see some friendly faces in the crowd. Well, we can't quite see your faces, but you know what I mean, guys. Welcome, welcome. Okay, what I'd love you to do, just while we're pausing for a minute and waiting for people to come in, if you're brave enough, is just to, if you've got any questions that are burning in your mind now, pop them in the chat box. But with no further ado, given timing, I might kick off with some introductions and a little bit of housekeeping. As I said, welcome. This is the second of a series we've done. We actually think that this is a really powerful partnership between Danny and Ben and myself, because we think so much of what's going on in your world at the moment has a legal component, it has a financial component or an accounting component, also has a HR component. So we are recording this session, so you'll be able to access that afterwards. We're going to have plenty of time for Q&A in the end, and that's where I believe you guys really will get the most value. Be brave, ask the questions. It's certainly a lot cheaper to ask it in here than potentially to go and get advice afterwards. And just to encourage you a little bit more, we have two prizes up for today. I forgot to tell you, Ben, but you're giving away a copy of your book called Cashed Up for the Best Question, as judged by Rose, who is our co-pilot today. And I'll be giving away a copy of my book, From Hire to Fire, and everything in between, for the person who's the most interactive in the chat box. So welcome, everyone. So what we might do without further ado is introduce you to our panel this morning. And I can tell you, you are so lucky to have these two people in the room. Danny is, I'm going to introduce myself last, Rose, so I'll head off. I know we said I'd go first, but Danny is an incredible employment lawyer and has some really high profile clients at the moment, and she's given up her time to share her wealth of knowledge with you this morning. So I'll hand to Danny to introduce herself.
Thank you very much, Tash. Yes, I'm an employment lawyer, and that's all I am. I'm a one-trick pony, as we joke about. But after all of this time, I think I'm pretty good at it. And I really love helping people and businesses get the most out of their relationship with each other. So I'm delighted to be here and be a part of this awesome triple partnership, which I think is just so much fun. Thanks, Tash.
Great. Thanks, Danny. And Ben has also been absolutely smashed since the world changed forever with everything JobKeeper. So I will ask Ben to unmute himself and introduce him to those of you who don't know Ben.
Yeah, wonderful. Thanks, Natasha. So yeah, my name is Ben Walker, and I'm the founder of Inspire Life-Changing Accountants up in Brisbane. Yeah, we're pretty proud over the last couple of months since COVID hit to have put over $7 million of some sort of help back in our clients' pockets. That's made up of about $1.1 million in tax savings that we've proactively helped, 3.3 in JobKeeper payments that we've helped our clients access via the ATO, and the rest of it, which I can't remember the exact number, is the cash flow boost as well. So yeah, we're pretty stoked at that. It's been a tough few months, but that's sort of keeping us going.
Right, great. And as I said to you, and for those who have just joined, you know, for me, the absolute gold in these sessions come from the Q&A. So by all means, pump your questions into the chat box, and we will leave some time for Q&A at the end so that we can answer all of those questions. So by way of brief introduction to those of you who don't know me, I'm the Managing Director of Employee Matters. I believe your employees are your greatest asset. They're also potentially your greatest liability, and should be treated as such. And never ever has there been a time where that has been more needed than now. What I'm seeing is a massive shift in the way we do business when it comes to our employees. We used to manage our team collectively, sort of, it was a one size fits all. Everyone works roughly 8:30 to 5:30, unless, oh my God, you had a baby and then you might get a part-time role. What I'm seeing now is we need to manage people as individuals, and that is going to be a major shift for the way we manage our team, get the most out of it. And I think for very many people, they're going to have to make some very tough decisions over the coming weeks and months. So thank you for coming along and spending your time with us. And without further ado, I am going to hand over to Ben, who's up first to talk about everything JobKeeper. Go, Ben.
Wonderful. Alrighty. So what I wanted to sort of share is just a brief update on the differences or the changes that the government announced on the 21st of July between JobKeeper, or the original package that was announced, and the changes that are occurring, which will take effect from October onwards. So just a quick refresher on JobKeeper 1.0. We're all probably aware that it was a $1,500 per fortnight payment per eligible employee or business participant is what they're calling it, as the owner of the business, or some sort of help that the business owners give. The eligibility was if your business was once eligible at any time in that 6-month window, then they're always eligible for that 6 month, or from that point onwards. So if you're eligible from March onwards, you get it for the full 6 months, regardless of if your business picks back up again. Now, the test period, we could look at a month versus a month in the year previous. We could do that from March onwards. So compare March 2020 versus March 2019, but each month after that, just comparing it to the previous year. Or we could look at quarter versus quarter for the June quarter or the September quarter. So that was kind of our eligibility there. Now, there were also a handful of alternative tests for fast growth businesses, or businesses that maybe were seasonal, or just the high level test didn't mean that they were eligible for some technicality. So what we found is actually a lot of our clients weren't eligible on the face value of this, but when we looked at alternative tests, a lot of them became eligible under those ways too. The initial duration was 6 months from the period of, it was very late March, but let's call it April through till September. That was the window where we could claim this. It's a 6-month window. And then in terms of the decline in turnover, that depends on your actual turnover itself. So if you're maybe one of the publicly listed companies, over $1 billion in turnover, then you needed to have lost more than 50% of your revenue. So think of businesses like Qantas or Virgin, for sure that would be them losing at least half of their turnover. And then if we look at probably most of the people joining today would fall into this category of under $1 billion in turnover. You need to lose more than 30% of your turnover when you compare these windows here. And also for the charities and not-for-profits joining, the requirement's a bit less. You would have needed to lose 15% or more to be eligible as a charity or not-for-profit. Now, I've added this one down here because on the 7th of August, so that was only last Friday, the government added this change from first round to second round JobKeeper. So the date that you needed to have employed a full-time or a part-time person for them to be eligible for JobKeeper 1.0 was the 1st of March 2020. Now, if you had a casual team member, they needed to be employed for at least 12 months up until this date, but part-time and full-time was the 1st of March, and they needed to be on the books. And I'll show you the differences in the next slide. But that's a quick refresher of where we've come to. Now, a lot of these rules were basically announced and effective within a week or two. What we've had with JobKeeper 2.0 is that we've got at least a month, which is kind of a relief for us to work with business owners to try to decipher what it might mean to their business. So instead of days, we've got weeks, thank goodness. But let's have a look at what's changed for JobKeeper 2.0. Now, the payment rate here is actually dependent on how many hours the employees' normal hours were before COVID hit. So they're looking before March. So if someone's over 20 hours a week, so full-time people would definitely fall into this category, or part-time or casual over 20 hours a week, then you're looking at the payment rate dropping from $1,500 a fortnight down to $1,200 a fortnight. And that's for the first 3-month extension of JobKeeper. So I might just say JobKeeper 1.0 was a 6-month initial period. Now we're looking at 2 3-month extensions in JobKeeper 2.0. So the first extension is from October to December 2020. And then the next extension is from January to March 2021. So JobKeeper in total currently is going to be running for at least a year here, if they don't extend it even further, depending on how we go as a nation. So, so what I mean by drop down to $1,200 a fortnight, that's for the October to December period, and then it'll drop to $1,000 a fortnight, January, March next year for the people who work over 20 hours. Now, if you work under 20 hours as an employee, you're going to basically take a huge hit here of a $1,500 a fortnight down to $750 a fortnight. So that's half, and then drop down in the January to March period for $650 a fortnight. Now, the interesting thing here is you're not just guaranteed JobKeeper 2.0 if you are eligible for JobKeeper 1.0 or the first round. And what they're looking to do is retest it based on actual results. Now, this has also changed from their initial release in late July. They have changed this testing, sort of broad testing criteria, and they did that last Friday as well. Now, what you need to do from a high level, you need to have a look at, is your September 2020 quarter less than 30% of your September 19 quarter. And that's if your turnover is less than $1 billion. Obviously, if you're over $1 billion, it's 50%, or charity or not-for-profit is a 15% drop. Now that's September quarter versus quarter last year. Now that's to claim for the first 3-month window for October to December. And if we look at your eligibility for the window in January, March next year, you'll have to look at, have you had a sustained loss in December quarter versus December last year? Now, originally the criteria here was that you had to have a loss in June quarter and September. And what that didn't take into account was, let's say you're a business in Victoria, you had an initial hit to your business in March and April, and you've picked back up in June. And now you've been hit by this second wave of lockdowns. And so that your June quarter is actually probably not at a loss, but your September quarter well and truly will be. So that was a lot of businesses, and the feedback that the government got on the 21st of July was that, hey, this isn't going to work for people who actually are now back in a dire position. And so they got rid of the requirement to have a loss in June and September quarters, which was one of the changes they made on the 7th of August this year, so last Friday. So you do need to retest based on your actual business performance, and you can do that. You need to basically check each quarter here. Now, in terms of the duration, I mentioned this before, it's a 3-month extension, then a further 3-month extension for the second round of JobKeeper, which will take it to, if we look at this, a total of 12 months. And there's no change to the decline in turnover percentages for these categories. And another one is the employment date is the 1st of July 2020. So, my perspective here is that if you've had casual employees that weren't quite eligible for round 1, because they might have been working for you for 11 or 10 or 9 months, then have a look, because they might actually fall into the 12-month requirement as at 1 July 2020. Or let's say you're a business who didn't, we've got clients who are actually doing pretty well considering the circumstances here, and they've actually hired people to deal with the growth in their business. And let's say you're based in Victoria, you've hired people to take on the growth, and now you're back into lockdown and you're taking a hit again. Then you might find that some of your full-time or part-time people could be eligible if you had hired them and they were working for you at the 1st of July 2020. So broadly, these are the changes from JobKeeper 1 to 2. And the government's also said that, they're going to work out the details here. So there's a few questions that pop up with these changes. The first one is, how are business participants considered with the 20-hour rule? Because often business owners, they often would pour in heaps of hours, but we don't necessarily keep timesheets or logs of how many hours we've worked. So how is that going to work? Also, we haven't heard about alternative tests yet for JobKeeper 2.0. There were alternative tests for the first round, so we expect there'll be some ability to apply alternative tests for round 2. So recommend take these changes here, but also keep an eye out for any updates to this as they're released from the government. And we've still got quite a few weeks until we need to start applying for this, or looking at our business performance and working out whether we're eligible or not. But yeah, there's a high level of the differences between JobKeeper 1 and 2.
Fantastic.
So,
Sorry, go.
Yeah, no, I was actually going to hand over to Danny.
Danny next, but I can see all your questions coming through the chat box. Keep them coming. We will absolutely answer them. Just in terms of keeping us on time and getting through the great content, we'll just hold those to the end. So you can put them ideally in the Q&A box, and I will get Danny to share her screen and unmute herself, and then we'll talk about the legal aspects of everything JobKeeper and employee related at the moment.
Thank you very much, Natasha. So I'm hopefully sharing my screen. Natasha, can you see that?
Yep.
Just to make sure that the technology works. Huzzah. So I am going to talk very briefly about some of the legal things to keep in mind. And whilst Ben's gone through the nitty gritty of what JobKeeper 2.0 looks like, I want to talk about it on a macro level. So here we've got a government in unprecedented times scrambling to keep our economy moving in the right direction. And this is their blunt force instrument to keep everything on track. It is a moving feast. And the way the levers are being pulled is something that we just can't predict. And there are still some murky areas in where we're going to go with this. And as recently as yesterday, the government said that there are some very deep considerations being made into further tweaks of the program. So it's great that it's here, but we've all got to pay attention to the dynamism that the structure is actually delivering for us, and to keep on top of those changes and how they impact our business. And there are still some murky areas. But what we do know is that documentation for JobKeeper is mission critical stuff. If you're receiving it or you want to receive it, and there are issues with how you want to structure your business, including if, for example, you don't want to pay people much more than the JobKeeper amounts that you're getting in because you just can't afford it, then there are some really important documentation steps that must be taken. And if you don't, then you are exposed to a variety of sources of liability from your employees, from the ATO. The Fair Work Ombudsman might jump on board. So if you haven't yet dotted all your I's and crossed your T's, now's the time to fix all of that up. What I'm particularly interested about, or in talking to you about today, and this is something that Natasha's going to really hammer home for us, is that just because you're getting JobKeeper doesn't mean you should continue blindly into the JobKeeper sphere and not think about the consequences for your business as the pandemic continues. And it might be really important instead for you to have a good hard look at your resourcing of your business and whether you really need to restructure it or not, because this is a question of business survival. And the JobKeeper contributions might be masking some very, very concerning statistics within your business that you are either choosing not to see, or it just hasn't really come up in your attention yet. So for those of you who are thinking, oh, that might be me, these are the things to look for. Think about whether you have any reasonable prospect of coming back to a pre-COVID level of work within your business. Has the market for your product or service changed? Is there going to be the ability to actually use all of the people that you've currently got that are being supported through JobKeeper when the dust settles? If the answer is no, the time to act is now. Whilst JobKeeper continues to be paid into your bank account or your business account, and that is helping fund the current liability to your employees for their wages, and you might have jumped through the hoops that you need to reduce the amount that you actually pay, the full-time entitlements continue to accrue. And so every single day, you're chipping out a little bit extra annual leave, long service leave, personal leave onto your long-term liability, onto your balance sheet. And when it comes time to actually rip the Band-Aid off, if you have been complacent for 6 months, then that 6 months can be a very significant increase in termination entitlements at the end that might actually be the nail in the coffin for your business. So it is so important not to think, oh, it's okay, I've got JobKeeper coming in and I can just cruise for a bit. That is not the case at all. You need to be very focused on what your business needs you to do and jump through the hoops that you need to in order to do a restructure. Now, restructures are hard. If you're covered by an award, they're even harder. And Natasha's going to take you through how to do the process, and that's the benefit of excellent HR support to make sure that you tick all of the right boxes. And also there's a lot of benefit in having your accountant give you the payout figures, because the taxation treatment for people who are being terminated on the grounds of redundancy is very different to that of any other termination. And so it's trickier than you might expect. So you must consult if you're covered by an award or enterprise agreement. There's a lot of need to document things, and a contemporaneous file note, even if it's just an email to yourself that sets out bullet points of the reasons why you're making a decision to restructure, is going to be brilliant in the future unfair dismissal claims that are likely to come, because everybody's having a crack these days. You've got to pay out entitlements, very important. The accrual of entitlements during a JobKeeper period will be as high as if they were still continuing on their ordinary course of work. And there are mechanisms where you can apply to the Commission to have your payout of severance, not annual leave, not notice, not long service, but the severance or redundancy pay component reduced.
Danny, can I interrupt you for 1 sec there? We've just had a question. Are you going off slides, or are you just freewheeling at the moment? Your slides aren't moving.
Oh, I'm at risks and considerations for conducting a restructure.
Okay, so if you can just drop down a couple of slides, that would be awesome. Maybe enable editing or put it in presentation mode might make it easier. Far right.
It says I'm sharing my screen.
Yeah, I have a feeling there might be a problem here. I'll get those slides up on my end, Danny, and see if I can share them.
Okay, I'll stop sharing.
Which one are you up to, sorry?
Actually, my last one.
Okay. Alrighty.
Everyone will get the deck afterwards. We will solve that. And you can answer any or ask any questions in Q&A.
Yes, but I'm actually finished. So over to you, Tash.
Right, fantastic. Now, I noticed there was only probably one question that flew in there into the chat box, so please do add any other questions. I am going to share my screen now, and hopefully I will not have the same issues. So let me test first. Has my slide moved, Alistair? Yep, great. All right, I was surprised Danny and I hadn't showed each other our slides, but she spoke about Darwinism, and I came across this quote by Charles Darwin. I think it's really wise words for us to remember at the moment. It's not the strongest of the species that survives, not the most intelligent that survive, it's the one that is the most adaptable to change. And I think this is really compelling at the moment, and I love this quote because I would ask you to ask yourself, are you adaptable to change? Because I think everyone needs to get really comfortable, because this, and it's an overused phrase, but this is the new norm for us, and the only constant is going to be change. So, and for those that survive this in business, and there are some fairly scary statistics flying around at the moment, but for those who survive, they absolutely need to have their team on what is going to be the roller coaster ride with them. And those teams that have that, have that buy-in to the business's success will be the teams that succeed. They won't be the teams that, or businesses that fail. My quick disclaimer, the advice I'm giving to you today is general in nature. It's HR, it's not legal advice. That's when you go to Danny, when you want that legal advice. All right, let's get into the thick of it. And we are going well for time. So we're going to have some good time for Q&A. And I can see there's loads of questions going in there, which is fantastic. It is going to come as no surprise to any of you on this call that we are in an area of massive disruption and chaos. And for businesses and business owners and managers and employees, this for many has been absolutely devastating. But I actually think the biggest test is yet to come. What JobKeeper did, and I'm a huge fan of JobKeeper, it was not perfect, but it enabled us to provide life support to businesses to adapt to the new norm or work out where we were at. And I think that once that stops, which for many businesses it will, or even if it continues, it makes it the business no longer viable. Everyone needs to be planning how to come out of it if you're not already. And one of the things that is the thing that everybody should be doing as a process is to start to look at restructuring their business. And I want to talk to you about this. It's around doing a systemic review of your current situation in terms of your processes, in terms of your people, in terms of your market. What does your business need, and what resources, and I'm talking about people in this case, does the business need into it? Now, even though I've used that word people a couple of times there, I want to be super clear here, and this is absolutely critical for anyone who's going to be going down this path. You need to take the people bit out of the restructure equation. You need to be looking at roles and not looking at this as an opportunity just to let some people go who have been problematic in your business, who aren't performing. So let's talk about what could be the outcomes of a review. And they are complex, but it's about how you reorganize and restructure your business, and then what roles might be able to be done without or might need to be removed just because that part of your business doesn't exist anymore. And there are two main areas this will fall into. It could even end as a small restructure. So you can sort of almost pick a couple of roles that aren't available or aren't needed anymore, individual roles we call them, and make those roles redundant. And I'm going to go into the justification in the business case later. A larger restructure might happen, say, for example, you have a warehouse and you've got 50 people in there, and the reality is with what you foresee in terms of the movement of your business or the production in your business, you only need 25. Well, what is the structure and the assessment process that you need to go through to work out which 25 you're going to keep and which 25, unfortunately, are going to lose their jobs? Now, that is a much more complicated scenario, and you need to very carefully assess and very fairly assess and objectively who are the roles and the people that might be going. And that's where everyone's doing the same role. And this can be done in a spill and fill method or some other selection method, but it needs to be objective, it needs to be measurable, and it needs to be non-discriminatory. I've got so many talks I'm doing today. I'm already mucking up my words. I finish late tonight. Anyway, it's really important that these decisions are based on the roles and the operational requirements of the business. And you need to prepare a really solid business case to justify why you're making this decision, because you are potentially going to have to share this information with an impacted employee throughout the consultation process. So you need to be able to justify why it's Fred's role and not Ginger's role. So let's move on to redundancies. Due to the coronavirus, I have to say at Employee Matters, we have seen an increase in where our clients have gone it alone, or they weren't our clients up front, and they've suddenly got their letter from Fair Work to say you need to show up at a mediation session to justify why you got rid of Fred. And I have to say, the reason why they wanted to get rid of these people was probably very valid, and the Commissioner would have some sympathy for you, but the process you followed was not correct, and that's where you've come unstuck. So we have seen some really concerning ways that people are exiting people from their business and using COVID as a bit of an excuse to do things quickly and potentially inappropriately. Let me be really clear here, because I think this is an important takeaway for everyone on the call. For a redundancy to be lawful, it must be what we call genuine. A dismissal is not genuine or not a genuine redundancy in the case that you actually go out and hire someone who's cheaper to do the work for you. So you keep the role, you just replace them with a cheaper resource. That is not allowed. Or you haven't followed the consultation requirements in your award or EBA, or you haven't actually considered whether you can redeploy them to another role in the business. Now, a quick case on that, there was a Weight Watchers case. Danny would know the details of this a long time ago. And basically she was a New South Wales state manager, and there was a redundancy scenario, and there was a more junior just Weight Watchers consultant role available, and they never considered offering it to her. Now she would have actually taken it, but they never considered actually redeploying that person to another role. So you have to consider, are there other roles in the business that people might do, given that they just want a job at the moment, as long as there's a robust consultation process there. So you must follow the consultation process very clearly as they're stipulated in either your EBA or your modern award. And I'm going to talk about timing and consultation on another slide. So for any of you in the finance side of this or are worried about the costs, let's talk about the costs. Whilst removing people from your business may offer you longer term financial gain, and in many cases, in this case, it's key to your survival, the cost of a redundancy program can be quite expensive, and you need to very much weigh up the short-term gain with the long-term gain and make sure that you absolutely have the cash flow to pay for this, because it is an expensive operation. So if you have 15 employees or more, you must pay redundancy, and make sure that you calculate your 15 employees correctly, because casuals can make up that number as well. So you have to pay out all of their entitlements, anything that's been accrued for them. And if they're not covered by an EBA or a modern award, then you have to follow the national employee standards. So things that you need to think about: you need to pay out their redundancy pay. So that is governed. There is a set amount based on years of service that you need to calculate. You need to pay out their notice period, and that includes notice with their superannuation on top of that as well as part of that. You need to pay out any annual leave that have accrued. Here's a lesson for anyone: don't let your annual leave balances skyrocket. Years ago, I did some work for a corporate who will remain anonymous, who had, I think it was 7 years of annual leave sitting on their balance sheet. It was millions and millions of dollars. And so then they had to go through a process of culling that all down. These are the times when you want to make sure that you're managing your leave entitlements so that you're not maximizing or causing problems to your balance sheet. And the last one's long service leave. If they haven't been taking their long service leave, that goes as well. So if you have under 15 employees, you don't have to pay out the redundancy component of that, but you still have to follow the process. Back to that argument I said up front, your reason for making someone redundant may be valid, but you need to follow the process correctly. Now, this is the bit where you're not going to like me, and I'm hoping everyone's taking notes. It costs somebody $74.50 to make an unfair dismissal complaint. Now, at the moment, you have got thousands and thousands of families. So statistically, before COVID, 38% of Australians were worried about their financial future. What do you reckon that number is now? For $74, they are going to have a crack, because if it means their family's survival over the next 6 months, and it could mean up to 6 months salary and or reinstatement. Now, let's face it, it's not going to be reinstatement at the moment because there is no job there. But there's a very real possibility that you might have to pay out 12 weeks or 16 weeks or whatever the case may be. So if we just take the average Australian salary at the moment, which I think is about 65K, Danny and Ben might clarify that for me, and they get up to 24 weeks, that's $32,000 you're going to have to pay out, plus your time that you've been involved and so on and so forth. And here's one other sting in the tail. If you've let 10 people go and one of them works out that they can go to Fair Work and comes back out and says, oh, I got 12 weeks salary out of that, what do you reckon the others are going to do? They're going to front up as well. So it's really, really important, get this process right, invest now and get the process right, because that could be what brings you unstuck. You know, you've done all this work, you've reduced all these costs, and then you get all these unfair dismissal complaints as a result. So let's talk about timing and consultation. Redundancy processes, and many of you on this call have probably not ever experienced it in this sort of level or magnitude before. It is not easy. It's complicated. It takes time. It takes energy, and it can evoke a lot of strong emotions and conflict in the organization. So I know that there's a lot of financial pressure there to quickly turn around a redundancy process, but you need to consider a couple of factors when you're doing that. So you need to follow the consultation process as per your award and modern agreement. And here are some things that consultation makes you do. So you need to notify anyone that is affected by the proposed changes. You need to provide them with information in writing about what is happening and what are the potential ramifications for them and the business. That is true. That's where most people come unstuck. There's no written notification. You need to let them know what the potential impacts to them as an individual are. And that's where you'd put in an at-risk letter and what is the business case and the justification for that redundancy. You need to discuss all the steps you've taken to try and avoid this situation, very unfortunate situation that this person now finds themselves in, and what you've done to try and minimize the effects. And then lastly, you actually need to consider the person's thoughts around what they think could happen that might help them keep their job. And you have to genuinely consider what they're asking you for. So they might say, well, you've lost your receptionist. I'm happy to be the receptionist. Why can't I be the receptionist? So you don't have to take everything on board that they suggest, but you absolutely have to give it due process and consideration and respond to them. So it's all about engaging with the individual and giving them all the necessary information, and then, you know, coming back to them with your thoughts. So you're already hearing, I'm guessing, that there's a lot of time, there's a lot of conversations, there's a lot of documentation involved with this. And it's really important, especially if you have a larger business, that you have stakeholders understanding what's going on, understanding the timeframes, and understanding what the impacts for people are. So consultation's a legal requirement, but I can't emphasize enough the way you communicate and treat your employees with dignity and respect and care at this time may save them from taking an unfair dismissal complaint against you. So let's talk about who needs to be involved. I love this picture because I reckon there's a whole lot of people diving for cover now. You know, if I said to you who in this call loves having these really difficult conversations, I'm pretty sure no one's putting their hand up now. They are not easy. Oh, Danny does. That's right. Danny has a ball with this sort of stuff. They are not easy, and they are very difficult. Quick story. I flew into London to be the HR manager at a professional consulting firm a couple of days before September 11, and I had to make 50 people redundant. I just arrived as the new HR manager, and the first time they meet me is when I'm showing them the door. And I was known as the angel of death. But what I realized through that process is you can do it well. and you can do it professionally and you can do it properly. And that's what I would encourage everyone to do. So let's think about who needs to be involved: the leadership team, the manager. You also need to have payroll, finance, or your accountant involved. Here's a couple of things. Mental health. I am a mental health first aider, as is Danny. We are seeing major repercussions in the mental health space. And I tell you, it's going to get a lot worse before it gets better. Have an EAP program, an employee assistance program set up to provide counseling support to those individuals who now find themselves not only without a job, but potentially with no fairly short-term prospects of getting a job, with 2 kids in school and a wife who may have just lost her job as well. So EAPs and all these things will add to your favor if you end up in Fair Work and you're defending a case and you say, I gave them EAP and this is all EAP, this is what I've done to protect them. Outplacement providers. Your people may have never worked, gone for a job for the last 10 years. You need to give them support, help somebody to get their CV done for them, and help them understand how to do interview skills training. How do you use LinkedIn to find a new job? IT. You want to make sure you get back all your equipment. All of the equipment may be at home now, so you don't just gift it to them when they walk out the door. That could be arranged as part of a settlement. Danny does that quite often. You know, people say, can I take my phone? It's been my favorite phone forever. You know, that phone, ripping it off them at that point could be the worst thing you ever do. Give it to them, but make sure that that's in the agreement. And lastly, you need to talk to the teams and the managers and the teams and communicate on a company basis for the teams that aren't impacted, because news like this travels like fire, and it's really important that everyone has a clear message from the exec team or the management team that says, guys, we've had to make this really difficult decision. Here's the thinking behind it. So have that communication strategy as part of this, because that is really important when people are getting frightened. And the other thing I would say here is, just to wrap this bit up, is that, you know, if you haven't already learned something, communication is absolutely key. Redundancies are complex. You know, it's not as simple as sitting someone down, or worse still, texting them. With Danny, was it you and I were chatting about that example the other week where you were brought into a room, and I kid you not, everyone said, the manager said, if your name's called out, go to the other room and go to the room next door, you're going to be made redundant. You know, it is appalling behavior and cannot be done that way. So make sure you invest. You can, make sure that you do the right thing by your people. So increases in unfair dismissal, it's up 70%. So people are doing this. And so I would encourage you to get it right. Okay, I am going to stop sharing my screen now, and we are going to move into Q&A, and we've got 15 minutes of power as we race through. So I will start in the Q&A box, and then I will move. So I'll call these out to you guys. Ben, most of yours will be up front, and if we can be punchy, because there's about 10, I think, questions in there. Yep. Ben, will there be alternative tests for JobKeeper 2.0, or are we restricted to the quarter versus quarter testing?
Kylie, there should be some alternative tests released. We just don't know what they are yet, but probably similar to the first round of JobKeeper, I would imagine. So keep an eye out for those updates.
Great. Next question is, how do you find out the severance amounts to consider for redundancy? It depends what award you're under and whether you've got any others in your agreement, but it's listed on the Fair Work site. Danny, I'm trying to remember them off the top of my head. From a rough perspective, if they've got between 1 and 2 years service, I think it's about 3 or 4 weeks. 4 weeks. Yeah. If they're over 45, they get another week.
That's notice, but yeah.
That's part of the notice. Okay.
Yep. So there's notice and there's severance. They're separate entitlements, and they stack on top of each other.
Great.
One thing I want to... Yeah, one thing I want to do is just show everyone how to access what their annual leave balances or the dollar figure is in Xero. And now this assumes your Xero is up to date, your payroll's been done correctly. But if we go to reports here under accounting, we scroll down to payroll reports leave balances, this one here. We can run at an effective date. I'll do it as today's date, what our leave balances are. So it lists out all your employees and the type. You may want to group them by the leave type, which shows your annual leave. You've both got hours under units, and then the dollar figure as well. So this business, this is the Xero demo file. It's got $6,000 in annual leave, and That's an easy way to check where a team member is at if you're considering, restructuring or redundancy, that sort of thing. So there's your annual leave. Personal carers leave, that's AKA sick leave. And my understanding is that's not paid out when someone leaves. Is that correct?
That is correct.
Yeah,
That's
you
correct.
don't get paid
Okay.
out. Yeah.
Wonderful. All right. And so the other things to consider are, well, check your award and your contract, but the other big one is redundancies. That's right.
absolutely. So I think what I took from that is how quickly those amounts stack up.
Yep.
You tend to ignore them because they take the time and it doesn't really cost you anything, but it does. Okay, next question from Justine. Is there an option to reduce the salaries of the team? I'm going to give this one to you, Danny, because I think I know what you're going to say. If so, what is the percentage it can be decreased by?
Okay, it depends if you're getting JobKeeper or not. If you are, then there are some special get out of jail free cards that have been incorporated into the amendments into the Fair Work Act. So you've got to jump through some extra hoops and you issue what is called a JobKeeper enabled direction, which will allow you to reduce by whatever percentage you need to, provided the base is the JobKeeper amount, and you're not telling them to work, for instance, if they were getting an hourly rate of $100 and you're paying them $750 a week, you can't make them work for 20 hours for the same $750 a week. So it has to be a proportionate reduction for the hourly rate. And there are some extra hoops you need to jump through as well, like consult, blah, blah, blah. Paperwork, huzzah. If you're not covered by JobKeeper or you're not receiving JobKeeper, then you need to do that by a restructure or by agreement.
So you talk with them. If they agree to do it, we're good to go.
Yeah, if they don't agree to do it, then it's like a redundancy kind of process.
Yeah, wonderful.
Yeah.
Okay.
Justine, what was the point around under 15 employees and redundancies? Did you say that we don't have to have the payout, the redundancy payment, just entitlements? That's correct. If it's under 15 employees, there is no, because you're a small business and they don't expect you to have the ability to fund those very large, 4 weeks, 6 weeks or whatever. Danny, what do you add?
Yeah, just the severance amount though. You still have to pay annual leave, long service leave and notice.
Notice.
Yeah. And Kate from my team has reminded me too, it depends on the award. She's absolutely right.
Yeah, true that.
Wonderful.
Okay, what is the shortest period of time a redundancy period can occur? So you're talking about, I think there, Tom, the sort of from the consultation and the initial risk conversation and then the end. There's some best practice here.
Yeah, look, there is, and there's also some case law that we can reflect on from the Fair Work Commission in an unfair dismissal context, where they have said a failure to consult, technically it's an unfair dismissal because you haven't ticked the box, but the amount of damages that attaches to that is only 2 weeks. So we extrapolate back from that and think, okay, well, 2 weeks is the rule of thumb consultation period. I've seen as little as 1 day or a couple of hours. And it's taking a punt, but you've got a business to run and you've got to move quickly sometimes. So it's whatever's reasonable in the circumstances.
Excellent.
Wonderful.
Okay, if the employee received JobKeeper from a company under JobKeeper 1.0 and it will stop in September, is there any possibility he can receive JobKeeper as a business participant? He's the sole director from company B under JobKeeper 2.0 if all the other conditions are satisfied? That's a Ben question.
And Angela, I'm probably going to say...
more detail required.
Yeah, I'd have to have a look at what the details around company A and B. Also, if they're part of the same wholly owned group or same family in control of them, need to be very careful, because why is company A not eligible and why is company B now eligible? So so we need to have a look at that and just make sure there's nothing sus happening.
Because the ATO will be paying, and those things, I know Ben mentioned it a lot last one, ATO can see a lot more than they used to, and this sort of stuff gets flagged with them, and it's high risk if it's
Single touch payroll, man.
Yeah.
That stuff has blown the data open
Mm.
wide. I've
Yeah.
got examples of clients being tapped on the shoulder by the ATO saying, this person that you're interested in thinking about applying for JobKeeper for, but you haven't actually applied, is already getting it from somewhere else.
Ooh.
Yes. Wow. That's great.
And that has triggered our client to say, hang on a second, how could you possibly be getting it somewhere else? Because you work for us full time
Yeah.
on an exclusive contract, and we ended up terminating that person. Cheeky.
Interesting.
I
All right, let's go. We've got to power through. So Nina says, any thoughts on requesting staff to take pay cuts opposed to a redundancy, as opposed to a redundancy? Appreciate it's by agreement. However, can it be by election a majority rule? Over to Danny.
Can you say that again?
Yeah, so essentially what they're wanting them to do is requesting staff to take pay cuts, as opposed to we're going to have to make you redundant. They appreciate that it's by agreement, but can it be by election a majority rule? So how could you get the whole team to say everyone's taking a 20% pay cut, is how I understand that. Is that right, Nina?
But what if there's one person that says no? Just like in the Big Four accounting, there were a couple of examples where they said it's a 20% blanket reduction unless you've got a bloody good reason not to. Or we'll just assume that it's 20% across the board, and people were pressured not to come back. But that is a very high risk strategy, and it's not a majority of rules kind of situation here. It's an agreement with individuals, or it's a restructure.
Great. Okay, let's push on. Justine asks, what date does the drop from 1,500 to 1,200 happen, Ben? Which pay run do we put that drop into? It's 28th of September, isn't it?
I think that's the start date of that fortnight. So the late September to early, what's the next month? October. So I could find that date. Exactly.
You have a look at that. We'll go on to the next question. It's to you as well, Ben. If we employed a casual after July the 1st, are they eligible for JobKeeper or only full-time, part-time for JobKeeper 2.0? So it's a casual, as long as they've got 12 months service, they would then qualify. Is that correct?
Yeah, but doesn't look like they had 12 months service at the 1st of July. So, Hitesh, I think that's a fine print question. On the surface, it doesn't look eligible.
Okay, great.
Yeah.
All right. Hi, will there be alternative tests for JobKeeper 2.0? Are we restricted to quarter versus quarter, from Kylie? And I think you might have answered that, but let's go again.
Yep. So at this stage, they've said that there will be some sort of alternative test or clarification on that. It just hasn't been published yet. But if we look at JobKeeper 1.0, I'd say they'd be relatively similar ideas to that one.
Great. Debbie asks, what if employee hours have changed from full-time to part-time due to the economic situation? I'm not quite sure, Debbie, what that question pertains to. Could you just pop something else at the bottom and I'll come back to that just to make sure unless you guys are interpreting that in a different way?
Could be around JobKeeper eligibility.
Yeah. If they're part-time, they'd get it, wouldn't they?
I'd say so, yeah, unless something else has changed.
Yeah.
Cool. Also, Justine's asked another question. Do the pay slips need to be changed for JobKeeper payments? Now, this is something that depends on the person receiving it. If they're actually working and getting paid above the $1,500 a fortnight, then there's no change needed to the pay slips because they're meeting the condition of receiving at least $1,500 a fortnight. If they were working less than the $1,500 a fortnight, then what we needed to do is a top-up payment in the pay slip. And yes, that's a different line item that says specifically JobKeeper top-up payment. But yeah, it depends on employee to employee. And if nothing much has changed in your business, people are still working, then it's likely that there won't be much changes unless they're getting less than the $1,500 a fortnight.
Excellent. Then JobKeeper 2 for a company is tested at a national level, I believe. So Victoria may be down, but New South Wales is okay. Therefore, the company does not qualify. Is that correct?
Well, I just changed the wording. Instead of being tested at a national level, it would be tested at a company level, regardless of where in Australia that company is operating. And so we need to have a look at almost an ABN level or company, depending on your structure. But it'll be at a business level itself, regardless if operations are WA, Queensland, Victoria. And the other thing is, if you've got multiple entities, then we need to have a look at that in a different way as well.
Excellent. Talk to Ben. Okay, Hitesh says, if we had a casual employee hired in August 2019 and made permanent from August 20, how would that work? Do they have to be made permanent before the 1st of July to be eligible?
Yeah, I think that was a double up question from that was in the Q&A as well.
Okay. All right. Redundancy elaboration, please. Hopefully I covered that, Kimber, but if not, do let me know.
That question was asked before you went into it.
Perfect. What legal rights do we have when a subcontractor leaves is now working from home and is taking our clients with her? Danny King.
Oh, look at your contract. Look at your contract. Call a lawyer. You can either commence proceedings and bring the pain, or you will be opening up Pandora's box because you have incorrectly classified that person as a contractor. They're in fact an employee, and you then poked the hornet's nest and they come back at you and sue you. So look, it's very circumstance specific, but give me a call.
Yeah. Okay. All right. Asking for a friend. Senior manager was offered a redundancy. Consultation happened Friday. Advised there will be no more marketing roles for the company, and redundancy happened Tuesday, the week after. So I think the question there is that appropriate consultation? And it would depend on what award, and
look,
it's not ideal, but it can be done quick.
It's a question of risk and whether they're going to commence a unfair dismissal application against you for failing to adequately consult.
Okay.
A technical
Rose, I hope you're working out who's going to be getting these books. I think this is our last question, and then we can wrap and we'll be on time. Casual team member, employed 2 years, declined all shifts since March. Oh, this gets me going. March to August. Now looking for shifts since we won't qualify for JobKeeper 2.0. Are we able to terminate this employee when they want you, they want you?
Call me. This is effort and risk and trauma. And look, maybe you can, but there's a way to do it. And now's not the time.
Okay, last question, I think. One sole trader quit the job on the 31st of March and not eligible to get JobKeeper 1.0 from the previous employer. Now set his own company up and act as director just in July. If his sole trade turnover test can pass, will he be eligible to enroll in JobKeeper 1.0 for August and September?
Angela, I think this is another one where we need to have a look at the situation in a bit more depth. It's too detailed to sort of answer, unfortunately.
That's fine. All right, guys, we're going to wrap it up there. I just wanted to say a huge thank you to Danny and Ben for giving their knowledge so generously. Do connect with us on social media. All three of us do send out a lot of content and are particularly active at the moment, given how fast this is changing. If you're okay, I am thrilled for you, but I strongly suspect many of your friends won't be. So, if they do need help, do send them our way. We'd be incredibly grateful for that. And thank you very much for your time. We'll do more of these as and when needed. And thanks for being such a fabulous and interactive audience. Rose, who gets cashed up, which was for our best question. That was tough because there were some really good questions there.
Definitely the winner would have to be Justine Coombs. So we'll send a copy to her. And the second one would have to be Edith Grabham as well.
Great. Well, congratulations, Justine and Edith. If you could send your addresses, your postal addresses to, where will we send that? I'm just trying to think.
I'll reach out to you guys directly. I've got your contact details. We'll be in touch shortly.
Fantastic. Well, look, thanks everyone. Have a great day. Stay well, and we will get through this. We just need to work together. Take care all. Bye.
Bye-bye.